Alright, hey guys, this is Vishal from Uncharted Effects. Before we begin this week's video, if you enjoy the video, please give it a like, and if you enjoy my content, please subscribe to the channel if you already haven't. So a lot to talk about this week, big week in terms of what's coming up geopolitically and economically. What we'll do is we'll run down the economic calendar first, we'll look at some geopolitics, and then we'll talk a bit about the Fed and the markets. So in terms of the calendar, again, busy week. We have inflation report hearings on Monday. We have the RBA minutes on Tuesday, economic survey of Germany. Wednesday and Thursday are the 2 days, though, that you should have on your radar. British pound CPI, we have the British CPI, so inflation data, as well as Canadian inflation data. And then the big one, the Federal Reserve interest rate decision, where they're expected to keep rates at 2.5%. We'll talk about the Fed a lot when we get into markets. We also have the Governor Lowe speech. We have the Bank of Japan. This one could be interesting because, you know, no one was really expecting the ECB to do anything, but they have decided that they can even go further negative, and the ECB is at 0.4%. So, I mean, you know, in this world, you never know. Maybe the Japanese will, the Bank of Japan will do the same. We also have the Bank of England interest rate decision, where they call it Super Thursday because all this data, where it's expected rates will remain at 0.75. And then we end off on Friday with some preliminary data and Canadian retail sales for the April. So that will be interesting. So I think, you know, if you haven't been living under a rock, you heard about the whole Iran situation. Basically on Thursday, there was some Japanese oil tankers which were supposedly hit by a missile or a torpedo, sorry. And the oil tankers were fine, the oil cargo was fine, but the crew had to be rescued. There's just a lot to talk about here because, first of all, no one's sure if it's if it was a torpedo, if it was a mine, if it was airstrike, if it was a land-based missile. And Javad Zarif, who's the foreign minister of Iran, came out saying, hey, you know, like Shinzo Abe, by the way, the prime minister of Japan, is in Tehran right now speaking with President Rouhani about like you know, peace, most likely for like nuclear peace deal and all that kind of stuff. And there really is no benefit for Iran to attack a Japanese oil oil tanker, and basically what he's saying is Iran is being set up, like that's what is implying, the foreign minister. And after that, the Iranians claim that they rescued 44 passengers, 44 crew members from the ships. And the Americans came out denying that, saying no, it was actually an American ship that rescued around 20-something crew members. So, you know, both sides are accusing each other, and both sides are not coming up with an agreed theory on what's actually going on. And then we got this video of what shows an Iranian ship trying to remove a mine that's near the ship. Very grainy, you know, very grainy video. You can't really tell, you know, what's what who's who. And now you're getting all this other data about, all this other news articles about the Iranians fired a missile at the US drone prior to the tanker attack. And basically President Trump and Mike Pompeo came out claiming that this was the Iranians. On Friday, the Security Council of the United Nations basically said that they would conduct further investigations. And it's interesting because America and her allies aren't really supporting her for this, for a new conflict, if that's what America chooses. Well, obviously the Saudis and the Israelis support this, and probably some of the other Gulf states. But you're seeing some reluctance in terms of the other international community. Just yesterday, we even had the Saudi Arabian oil minister come out basically saying that they do agree that Iran was behind the attack, and they support some sort of um, some sort of response that the Americans and the Saudis and whoever will administer to the Iranians. So that they expect some sort of response. Again, if you do follow my blog and my work and my social media, you know why I believe that there will be some sort of strike on Iran, and it's to do with the dollar. If China and Russia want to actually do some damage to the Americans, they need to hit the US dollar demand. The US dollar demand is always there because of it being a reserve currency, and of course the petrodollar. And essentially, Iran is a key node because Iran accepts any currency besides the US dollar. So as the dollar has been getting stronger, a lot of nations such as Japan, South Korea, Turkey, India, and actually quite a few European nations have been deciding to buy from Iran because they don't have to use the US dollar to buy to settle payments for oil. Countries like Turkey and India, for sure, have a bit more reason to do so because their currencies, the Turkish lira and the Indian rupee, have been getting decimated due to the dollar strength. And as the dollar gets stronger, I think more nations will sort of be forced, well, not forced, but they would like to stop using the dollar for oil payments just because their government can't afford it. The Americans came out telling these nations to stop doing so, and I believe South Korea and I believe Japan and some European nations decided they would stop. India and Turkey decided they will not stop, and it makes sense because their currencies are getting battered compared to the dollar recently. And this is the issue, pretty much. There's a lot of theories on why Iraq was attacked and Libya was attacked, and basically, just to put it short, it was essentially because Saddam Hussein and Gaddafi decided to drop the dollar for oil, and the Americans had to protect the dollar. And I'm sure some of Trump's advisors have told him that China and Russia, if they hit American dollar demand, and then they sell off treasuries, there might be some sort of issue. I mean, currently, if the treasuries are sold, I think there's plenty of demand within the states, pension funds and stuff, to buy up these treasuries that are dumped, and even European fund managers who would probably rather hold US treasuries instead of 30-year long-term European debt yielding 0 or negative. So this demand has to be hit, and I believe Iran is the key because they are sort of that big oil producer. Venezuela, I believe, is on Russia and China's radar as well, where they're trying to get Venezuela's oil production back to par, and essentially from there they'll probably want to keep Maduro and his on one condition, and that will be once Russia and China have helped bring back Venezuela's oil production up to speed and up to par, that he will decide to drop the dollar as well for Venezuelan oil. And this is also why I think the Americans were very upset about Venezuela and were trying to remove him and trying to put their own candidate. I believe his name is Guaido, if I remember correctly. And I'm sure if he becomes the president of Venezuela, he will maintain this dollar policy. So Venezuela is still one to watch. Iran is a big one. And again, Iran is huge just because the Saudis are the ones that are feeling the pressure. They are OPEC pretty much. They control, I believe, like 20% of the oil reserves. And they are the ones who sort of started the petrodollar system. And from what you see with President Putin making good acquaintances with Crown Prince Mohammed bin Salman, who is in line to be the next king of Saudi Arabia, perhaps Putin is floating the idea, telling him, hey, why don't you drop the West and join this Eastern sphere, stop taking US dollars. And they were having good relationships. The Americans came out saying they didn't like some of the things Prince Salman was doing, and he's sort of been put aside by the regime in Saudi Arabia. But again, the Saudis, they know that because of this weapon, because they're losing market share, they can decide to drop the dollar because they can get their market share back from Iran. But they know holding this petrodollar system, they can be a major factor in influencing American geopolitical strategy and foreign policy. And I believe that's what they are doing. They probably told the Americans saying, hey, look, deal with Iran because they're taking away our market share. Deal with them, and if you do, we'll stick around with the petro system. If not, then we might have to look elsewhere, drop the dollar, and decide to join the Eastern Sphere. So a lot of things going on here, and I believe the Americans will have to act sometime soon. And remember, it's all about the dollar. They want to keep this dollar demand high. I believe, again, there will always be a high dollar demand, just because when all this stuff happens, people still run into the dollar because it's a reserve asset. But the problem is, as money runs into the dollar and the dollar gets stronger, more people will decide to stop using it for energy and oil settlements. So that's what I believe is going on with Iran. A lot of people are claiming that President Trump has sort of put himself in a corner where he has to act now because he came out on Twitter condemning Iran. And essentially, he can't look weak anymore. President Obama had a lot of red lines that he kept mentioning, but he never held them. And this is why Russia and China kept advancing their geopolitical ambitions. And it was just till the last year, or the final year of the Obama administration, when he finally pivoted to Asia, but a little too late, I believe. So Trump has to act. If he acts militarily, it's a message to China as well, saying, look, all options are on the table and we're not afraid to use the military if we have to. How the world community will react to that is a different question. Again, right now we're seeing in the UN, a lot of nations aren't really supporting this. Even American allies aren't supporting this war with Iran. It could be because they're, buying oil from Iran, so they don't want to stop using their own currency for oil. So keep watching this. A lot of crazy things I think are going to happen in these next months or years, and this is one of them. And again, it's all due to the dollar and dollar demand, and it's what the Americans have left. People are talking about the end of the American empire. Empires come and go. They all go in cycles, and it seems we are at the end of a cycle in terms of decadence. There's also social, economic, and political issues that are all converging at the same time. So interesting times ahead. What we'll do is we'll talk about the Fed, and for that we should look at the markets. So the Federal Reserve is on tap on Wednesday. So I expect from now till Wednesday, withholding any geopolitical decisions or events that are made, I believe the markets will probably just be choppy, just range a bit, won't really do much until the Fed speaks. And basically the biggest surprise that can come out of this meeting is if Powell remains hawkish, where he talks about, oh yeah, the economy's doing well and we're likely going to still raise interest rates next, in this next coming months or next year. That would be very negative for the market, because I think markets are already pricing in a dovish Fed and more rate cuts. And the question now is whether he will cut rates or keep them steady. That's the big question. Again, if you see my other videos and my blog posts, if you look at the yield curve of the bond market and the Fed funds rate, it's telling us that the Fed has to act relatively soon. And I think it's within this month or next month. So maybe this month, what Powell will do is just setting the groundwork and the foundation for potential rate cuts, and then next month they'll cut rates. The market, again, like I said, is expecting that, and again, either we cut this week or he just lays the foundations of further rate cuts, perhaps the next month. And again, I've always been saying this, but it seems now that central bank mandate is now about maintaining assets propped, keeping assets propped up. I know a few inflation data came out bad recently, and that's sort of a saving grace for the Fed, because they can still use that and say, oh yeah, because we weren't maximizing employment and because the inflation was low, we actually have to cut rates. So in that way, they're sort of giving service to their old mandate, but I still believe it's all about the markets. And you're seeing this essentially where now Powell's in a corner on Wednesday. If he does something hawkish, the markets will not like it. So a lot of pressure, very tough job for Powell right now, and let's see how it all goes. But in terms of markets, a lot of the equities look similar. Again, we could be seeing a lower high here. We have a big engulfing candle here, so this could have been the top. A lower high here, and again, a lower high is not confirmed until we break below the lower low and make a lower low. So that would be below this 2870 zone. So that's what I'm watching for the S&P. You can see here the NASDAQ is very similar. The Dow Jones as well, very similar. Of course, if we see a break here above 2900, then I think we're on our way to higher markets, new all-time highs, and that will probably come off of some sort of dovish Fed or rate cut type rhetoric. So that's what we're watching. Again, not expecting much to happen until Wednesday, barring some sort of geopolitical or Trump tweet or something. What we'll do is I think the German DAX is very similar to it. Maybe not the best looking. The FTSE as well, but a lot of these markets look like they've reached a top level here, and essentially they're just waiting now for some sort of central bank talk. So the Bank of England is this week too. Maybe they'll even prop this higher as well. So let's see what happens. Oil, there's nothing really going on too much on oil, but I mean not too much in terms of like my charts, but we'll talk about it because of course the whole Iran thing. This was the big move that we had going up. Well, again, big though. This is a 4-hour chart. You would think oil would have reacted a bit stronger, but it didn't. So now, could this be our first higher low that we're making? I'm not too sure. I would rather just wait to see this 54 sort of zone here break, 54.20 break. If you look on the daily, we are actually at some sort of a not the best flip zone. Actually, yeah, no, it's pretty decent, because if you do take it back, it does hit 2 or 3 other points here. So it is a good sort of flip zone where it's been support and resistance a few times. So let's see how price reacts around here. I'm not saying it's turning around right away, but I was expecting a bit more stronger move here in oil due to this. So let's see. We're seeing maybe a bit of a double bottom here too. Keep an eye on that. Gold, again, we failed to close on the weekly above this big 1360 zone, and now you can see it's providing resistance for the 7th or 8th time here, and a lot of people are watching this. I still think if we're above 1326, let's call it, because this is the higher low that I'm using, we have potential to continue higher. If we do break below that, then I would think that we're failing at this zone here. But again, I like gold going forward because I believe gold is that confidence crisis asset, and we will see gold and the dollar move higher together, I believe. Let's look at silver here. So on the daily, I want to take a look here on the daily. We had this pop above a flip zone, retest, and I'm just saying this now, but this could be our first higher low in this new uptrend. Again, that's not going to be confirmed until we break above here, which is the 15 zone, let's call it. And once we break above here, then we have our first confirmed higher low in this move up. Again, this is the big zone here around the 1470 level. It's been a good flip zone in the past, and now we've come back to retest it. Keep an eye out on silver. Looks decent, and I'm just going to be patient and wait for that break. Let's look at US Swissy. So this was a trade I took Friday for the pop on Friday here. I closed it, just, small trade here. I generally don't like to hold positions over the weekend, especially in this environment. So we had this nice pop here, looking for some sort of retest before we go higher. So, expect a bit of a higher low, and see if that continues. So I really like that. Euro pound, it seems like we're talking about this chart almost every week, but it does look like we are now starting to potentially show some signs of weakness, where we had our high here and we've had a bit of a bounce here and nice red green candle, but we still couldn't take out these previous highs here. So it seems that the sellers are coming in. I'm watching this level here at 88.70 for a close, and this thing can go a bit lower. We didn't really hit the flip zone that I wanted to see at like the 89.50 zone, but where were we? Where'd we go? 89.35, so we're like 15 pips away. But something, if we do get that break again, we just we be patient, we wait for those breaks, and then react. Aussie US dollar, nothing on the radar right now, but I just want to highlight that we are at an important sort of support zone. So if we see some sort of pattern here in this coming week, maybe something we can play on. There's a few pairs that are like this, so keep an eye out on that. Let's see here. Euro Aussie is a good one. Let's scroll back here. Nice resistance zone that we are at. You can see we even have a giant wick that we saw here a couple of weeks ago. Well, no, sorry, not a couple of weeks ago, in January. And what we're seeing here is a nice rejection of this level. We've had, two moves trying to break above it, and we've had the sellers step in, even producing an engulfing candle here. So I'm waiting to see a break of this higher low here, this area that I'm watching here at 162.85, let's call it. There are people who might even be eager and take the trade on the close here, but I would caution that, and I would wait for the break of the higher low here, the swing. So watch for this. Euro Aussie, nice uptrend, bit of a double top here. Let's see if we reverse from there. Euro New Zealand, I believe it's just a break. Again, this might be a bit too late because we've already had our bit of a trend, but it is an important zone that we are breaking. I would be more interested maybe if this becomes a fake out, but we'll see when we get there. So Euro Swissy here, not the best looking, but I like this just because this is essentially a lower high that we've made. So we've had higher lows, higher highs, higher lows, higher highs. This is our first lower high that we've made. Unfortunately, it closed like this on Friday, so I'd like to see some sort of retest or see how the market opens, and this potentially can take us back down to the 111.40 zone and maybe even lower. So like this chart, but it's not the best looking pattern for this week, but still decent. Pound Aussie. So Pound Aussie and Pound Kiwi were two good trades I took. I took them on the breaks of their the patterns that we were watching last week. Nice break, and essentially this thing is still choppy. Again, we talked about Pound Aussie being very choppy. I'm not ready to say it's about to flip over yet. It can potentially still make more higher lows, higher highs, so this can go either way. I think I just have a support level here on the 2 hour, because on the 2 hour it looks like, yeah, we are making a bit of a topping pattern here, maybe even a double top, and this could be our first lower high here. So on the 2 hour it looks like we could be flipping, but on the 4 hour we could still easily make some sort of higher low here before going. So this is more of a wait and see, but it's not the best looking pair. Pound New Zealand, another good trade that I took last week, and essentially you can see nice downtrend, and now we're beginning an uptrend. We've confirmed with our first higher low here because we had the break here, and generally when you get uptrend, you'll see multiple higher lows and higher highs. So this is just our first one. I'm expecting this to continue. You can even see here, I'm pretty sure a lot of people are talking about this, but you can sort of see a cup and handle type pattern here as well. So Pound New Zealand looks good and has some room to the upside too. So this is one that I like for this week. Don't really know what I have on Pound Swissy. Aussie CAD, good zone, good sort of zone that we're at in terms of support. Again, the only thing that's lacking is some sort of fun like pattern here. We're not really seeing a ranging pattern or double bottom or triple bottom or head and shoulders. But the 2 hour does look decent. Here you can sort of say we're seeing a higher low here, but nonetheless, this level here at 92.20 is key. So we will wait for the break of that level. New Zealand CAD's not on the radar, not on the list, but similar to Aussie CAD, where we are testing a nice support zone. But Aussie CAD is a bit further in because we're starting to see a bit of basing. New Zealand CAD, we're not really seeing any type of basing yet. Still can make that, but this could be something to watch for maybe midweek to see if we break 87.20, if we make some sort of decent pattern here. And then finally, it was very choppy last week, but CAD Swiss pretty much closing the gap. If we do close below this 74.40 zone, gap plays are very powerful. Once you close the gap on either way, it tends to go in that direction. So if we close this gap here on the downside, further move is very likely. Again, not the cleanest looking chart, but you can sort of see we've had higher lows, higher highs, very choppy. Even this breakdown pattern was very choppy. Again, most likely due because the Swiss franc is that risk currency, and Canadian dollar, you know, with the whole oil link and stuff. So CAD Swiss looks good, just because I do like these gap plays if we fill the gap. But that's really about it. I haven't really looked at Bitcoin. Okay, so let's see what happens here with cryptos. Don't really have much to say to them. This is just the first time I'm actually looking at the crypto charts here. Nice move up. I don't really have any comments. Not really part of my structure that I look for, but if we do get a close here above this zone here, then you do have a higher low here, and you know, maybe 10,000 is on the radar, so something to watch about. Again, let's see what the Fed does. I've been saying for some time, long bonds is good, just because it looks like the Fed will be forced to cut interest rates and maybe even go back to QE. This will probably be good for assets such as cryptos and gold and silver. But again, I want to emphasize that I believe gold is more of a confidence crisis asset. The theory is it's an inflation asset, but you got to remember, gold is up 20% even when the Fed has been hiking rates. So even as real rates were rate cuts were being factored in and being implemented, gold still got higher. And I mean, yes, you can argue that, oh yeah, even though interest rates are going up, real rates are actually still going down because the inflation level is very low. But I'm just using the official, statistics that that we see, and that's just generally how these money managers and economic majors and stuff base their decisions on. So just saying that, it is, I believe, a confidence crisis, just because it's not really living up to all the theories that are produced about gold. So that's it. Again, big week in geopolitics, big week with the Fed. Let's see if they'll cut rates this week, or if we will be getting rate cuts next month. That's all for me, and happy trading.